So this is live at the moment on gold. We do have a session that's just about, the gold pit opens just happened, but I want to go on to some others and we'll look at that back in a minute. So first of all, there's some very basic things that we always do when we're looking to trade the breakouts, is we look at the major support and resistance zones. So this is Euro US dollar. I'm going to talk about a trade this morning. So first of all, I've put in some major support and resistance zones here in blue. Just drawn those in. You can see here support, 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 resistance, and that comes into play when we're looking for fresh air for trading out of the range. And then there's some others up above. Again, it's just joining the dots and making sure those zones are strong so you frame the chart. So let's go now a little closer and start to look at this London open here today for Euro US dollar. So the range breakout looks at that opening range. So the first 15 minutes of that London open on Euro US dollar, it defines the high and the low of the range, but it also defines whether it's a bullish, bearish or neutral. So you can see at the moment it's just turned yellow, that range, so that's become neutral. It's not bullish or bearish, but the first candle closed and it was bullish. Okay, so only looking for a long trade out of that range, and it's got to happen within the first two candles of that range opening for it to be a really strong trade. So we can see here, we look at the depth of that first range, and we can see the risk reward to the next resistance level is around about 1 to 1.6. Decent risk reward, very, very sensible trade. Just going to zoom in a little bit more now, because this is now where we see how to manage this trade. We can see we've got the manager on here, which is a different indicator, but it allows you to understand the behavior of this particular instrument, and it looks at volume as well as price action. So one of the things we look at is this green ribbon here. It hasn't turned red yet. Okay, we've had a pullback, but the ribbon remained green. Order submitted. Okay, so now we have had that candle close and we can see that the ribbon's kicked back up again, so we are safe. We need to stay in this trade. So the technology behind this is very complex, but it's very simple on the chart. We define the London opening range. We're on the 15-minute. We see the price action form for that first 15 minutes. Then the software tells you the bias, which way you should be trading out of that range. And then the rule is very simple. If it doesn't break out of that range in the first two candles, you don't trade. If it does, most likely goes straight away, and then we have this big range breakout trade for the day. We use the manager to manage the trade and not panic. As long as that ribbon remains green, we stay in the trade. So that's Euro US dollar example. I'm going to go to gold now. We've just had the New York gold pit open. So we can see the range is defined. It's quite a large range. Okay, that's defined in green, and we're only looking for a long. But one of the things we should look at is the maximum range for this type of trade. So one of the things we can look at is the European Open this morning was red. The nice short trade was here, but we got then an indecision doji, that rejection of those lows here. That's the time to get out, break in. That happens. The next type of trade is the one I want to talk about. It's called the continuation trade. So there's 4 strategies with this particular trading indicator. The next one is where we come down and then we start to come back up, and you see the bias for the range turns green. So the continuation trade is we trade along out the top of that when the price breaks. You see it came to test again, and then flying up towards that gold pit open. Now, what we have to do is make a decision here that for this gold pit open, that range is quite large, so we probably won't want to trade out on top of it unless there's a catalyst. So today we've got PMI data coming out in about an hour or so's time, so we can actually use that to, if that's a catalyst, we can trade out of that. And then we've got oil. This is another great example here. So this is yesterday's oil pit open. And again, we do some training on this with people when we get this, especially for MT4, because it's a new type of strategy for MT4. Very, very strong. So this first 15 minutes, we get the price action. It closes quite low, but the bias is bullish. So we're only looking for the long breakout, and we get a nice big move up there. It does come back down. Nice move. We always set targets with trailing stops, and that, you know, that's just a standard move for oil. And then later on during that day, we start to move back down into the opening range. It's turning red, looking for a short breakout there. It doesn't happen. It comes back out again. It comes in, it comes back out, and then comes back in, turns red, put another order on to break out to the low side, and then it just comes back to test that opening range, which it does. It's very freaky, and then we come down hell for leather, and that is where we are right now. So I just kept a very clean chart there, didn't put the manager on or anything like that. Just wanted to show you the power of this opening range. It's not just defining that opening range, it's actually understanding the bias and which way to trade and the rules behind that. We have a data reversal strategy with this, where we define the range leading into data, and then we look for that reversal. We've got a straddle trade when the opening range of a particular instrument is yellow, and we've got that indecision, that neutrality, and we look for a long and a short there. But I just wanted to go through a few examples. Euro US dollar is one of the most traded Forex pairs on MT4, and again, we can help with this range breakout. We can define that. We can look at the London, we can look at European Gold Pit Open, we can look at the New York Stock Exchange Open. Later on today, and I may make another video actually, we define that range before the big data, and then we look for a reversal. Lots of ways to use this strategy. Fantastic for MT4. We've had this strategy running now for probably 2 years on other platforms. It's taken probably 5 months to actually get it working properly on MT4, and we're really, really happy that we released this. So please check out the links below to the MT4 version of the range breakout, and then I'll put the other version as well, the other versions in there, so you can check out all the different platforms it's available for. But again, it's not just futures trading. This is great for Forex trading, great for gold, great for oil. Just goes to show you that there's some really strong range breakout strategy plays out there. You just need to be able to define the range and give it the bias, so you know which way to trade out of that range. You're not going into it blind, and then using the manager. I'm going to put the link down below for the manager to actually keep you in the trade and maximize those profits consistently. So hopefully that helps. I'll speak to you all really soon.